Alfonso Cahero, A Journey into Finance History. Chapter 82. Social Media's Influence on Markets and Retail Investing, 2020s. Phenomena like the GameStop stock surge demonstrate new dynamics. The year was 2020. The world was grappling with a pandemic that had brought economies to a standstill, reshaped daily lives, and forced millions into isolation. Yet, amidst the uncertainty and chaos, a revolution was brewing, one that would redefine the landscape of investing and market dynamics forever. This revolution wasn't unfolding on Wall Street, but on the digital avenues of social media. As people retreated to their homes, they found solace in the virtual world. Platforms like Reddit, Twitter, and Discord became bustling hubs of activity. It was here that a diverse group of individuals, ranging from seasoned investors to curious novices, congregated. They were bound by a common goal: to navigate the unpredictable waters of the stock market and, if possible, make a profit. Among these digital platforms, one community stood out: Wall Street Bets on Reddit. Known for its irreverent humor and high-risk trading strategies, Wall Street Bets had a unique culture. It was a place where users, often referred to as apes, shared stock tips, posted memes, and boasted about their wins or lamented their losses. It was here that the seeds of a financial upheaval were sown. Keith Gill, known by his Reddit handle Deep Fucking Value, was an active member of this community. He was an ordinary man with an extraordinary passion for investing. One stock in particular had caught his eye: GameStop. To many, GameStop was a relic of the past, a brick-and-mortar video game retailer struggling to survive in an increasingly digital world. However, Gill saw potential. He believed the market had undervalued GameStop's stock, and he was determined to prove it. In August 2019, Gill began sharing his analysis on Wall Street Bets, posting detailed breakdowns and updates about his investment in GameStop. At first, his posts attracted little attention. But as 2020 progressed and the pandemic pushed more people into online forums, his posts started gaining traction. Users began to rally around his analysis, convinced that GameStop was poised for a turnaround. Simultaneously, another narrative was unfolding. Hedge funds and institutional investors, seeing GameStop's struggles, had heavily shorted the stock, betting that its price would continue to fall. Short selling, a practice where investors borrow shares to sell them, hoping to buy them back at a lower price, is a common strategy in the financial world. However, it comes with significant risk. If the stock price rises instead of falls, the losses can be substantial. As more members of Wall Street Bets bought into GameStop, the stock's price began to climb. What started as a trickle soon became a torrent. The rising price caught the hedge funds off guard. To cover their short positions, they were forced to buy back the shares at higher prices, driving the stock even higher in a phenomenon known as a short squeeze. The movement gained momentum, fueled by social media posts, tweets, and YouTube videos. It wasn't just about making money anymore. For many, it became a crusade against the perceived injustices of the financial system. Retail investors, many of whom had felt marginalized and exploited by Wall Street, saw this as their chance to fight back. By January 2021, GameStop's stock had soared to unprecedented heights. What was once a $4 stock had surged to over $400 at its peak. The world watched in awe and disbelief as a group of ordinary individuals, armed with nothing but their collective resolve and the power of social media, took on the titans of Wall Street. The GameStop saga was more than just a financial anomaly. It was a testament to the changing dynamics of investing in the digital age. It highlighted the power of social media to mobilize, unite, and empower individuals. It demonstrated how technology could democratize access to information and opportunities, leveling the playing field between retail investors and institutional giants. As the dust settled, one thing became clear: the world of investing would never be the same again. The GameStop saga had set the stage for a new era, one where the voices of the many could challenge the might of the few. It was a story of hope, defiance, and the enduring human spirit. a story that would be told and retold for generations to come. To understand the full impact of the GameStop saga, one must delve into the origins and culture of the community that made it all possible. R. Wall Street Bets. This subreddit, a corner of the internet where the bold and the brash came to discuss high-risk investments, was unlike any other financial forum. Founded in 2012 by Jaime Rogozinski, R. Wall Street Bets was created as a space for traders to share their most audacious trades. It quickly gained a reputation for its unfiltered and often irreverent content. The ethos of the subreddit was simple: fortune favors the bold. This was a place where massive gains and catastrophic losses were celebrated with equal fervor. The early years of RR Wall Street Bets were marked by a small but dedicated following. Members would post screenshots of their trading accounts, showing off their gains or losses with a mix of pride and self-deprecating humor. It was a community where the thrill of the trade mattered more than the outcome. Successes were cheered, and failures were met with a mix of sympathy and schadenfreude. As the subreddit grew, so did its influence. The user base expanded, attracting a diverse group of individuals from different backgrounds. Some were experienced traders, while others were complete novices. What united them was a shared love for the adrenaline rush of high-stakes trading and a disdain for the conservative strategies often touted by traditional financial advisors. One of the defining features of RR Wall Street Bets was its language and culture. The community developed its own jargon with terms like YOLO, you only live once, tendies, profits, and diamond hands, holding onto stocks despite volatility, becoming part of the everyday lexicon. Memes played a central role, serving as both a form of communication and a way to build camaraderie among members. The subreddit thrived on the idea of democratizing finance. Unlike Wall Street, where access to information and opportunities was often limited to those with significant resources, our Wall Street Bets was open to anyone with an internet connection and a willingness to take risks. This sense of inclusivity and empowerment resonated with many, particularly in the wake of the 2008 financial crisis, which had eroded trust in traditional financial institutions. As the years went by, our Wall Street Bets continued to grow, but it was the events of 2020 that truly propelled it into the mainstream. The COVID-19 pandemic forced millions into lockdown, leading to a surge in online activity. With traditional entertainment options limited, many turned to the stock market as a new form of recreation. Platforms like Robinhood, which offered commission-free trading and an easy-to-use interface, made it accessible to a broader audience. Amidst this backdrop, Keith Gill, under the alias Deep Fucking Value, began sharing his analysis and updates on GameStop. His posts were thorough and well-reasoned, presenting a compelling case for why the stock was undervalued. Over time, his updates garnered attention, and a growing number of users began to rally around his investment thesis. By late 2020, the momentum was building. The subreddit was buzzing with excitement about GameStop, with users sharing their own investments and speculating about the potential for a short squeeze. The narrative took on a life of its own, fueled by a mix of financial analysis, social media hype, and a desire to stick it to the hedge funds that had shorted the stock. The turning point came in January 2021, when GameStop's stock price began to skyrocket. What started as a niche discussion on a subreddit had turned into a full-blown financial phenomenon. Mainstream media picked up the story, and suddenly, everyone was talking about RR Wall Street Bets and the unprecedented rise of GameStop. The subreddit became a symbol of the power of collective action in the digital age. It showed how ordinary individuals, armed with information and a platform to share it, could challenge the status quo. The GameStop saga was a testament to the influence of social media on markets and the new dynamics of retail investing. As RR Wall Street Bets continued to make headlines, its members reveled in their newfound notoriety. They had not only made a significant impact on the stock market, but it also sparked a broader conversation about the role of retail investors and the democratization of finance. The story of our Wall Street Bets and the GameStop surge was far from over. It was a tale that would leave a lasting legacy on the world of investing. While our Wall Street Bets provided the community and the narrative, another crucial player in the GameStop saga was Robinhood. the commission-free trading app that had revolutionized the way people invested. To understand the full impact of the GameStop phenomenon, it's essential to explore the role Robinhood played in democratizing access to the stock market. Founded in 2013 by Vladimir Tenev and Baiju Bhatt, Robinhood was created with a mission to democratize finance for all. The founders, who had backgrounds in finance and technology, wanted to create a platform that would make investing accessible to everyone, not just the wealthy elite. They envisioned a world where anyone with a smartphone could trade stocks without paying hefty commissions. Robinhood's sleek, user-friendly interface and zero-commission model quickly attracted a large user base, particularly among younger, tech-savvy individuals. The app gamified investing, making it feel more like a game than a serious financial endeavor.